Hey gang, today I'm going to talk about a very important topic. A lot of traders consider this a taboo topic. And the topic is, again, this is a sensitive topic, but it's how to overcome losers, okay? How to overcome losers in your mind. You know, on paper, it's very easy to overcome losers, or in trading action, you just call your broker, you liquidate a trade. But the problem that I found out is, these losers, what happens is this. You take a loss, you take another loss, you take another loss, you take another loss, and on paper it looks okay. It doesn't look like there's an issue. But these losers, they stick to your mind. And what happens is every time you initiate another trade, subconsciously and sometimes consciously, those past losers, they creep up and they influence you and they distort your judgment and they cause you to either not make a trade, hesitate to pull the trigger, talk yourself out of a trade, or take a subpar trade because it looks safer or feels safer. So the impact of not being able to completely overcome a loser can be devastating. And here's another thing that I found over the years. The longer it happens, the longer it takes time, in other words, the longer these losers build up in your mind, the stronger impact they will have. Because guess what? When you're in a fear zone, when markets are dropping and you're close to your stop loss, a lot of times these things influence you, sharply influence your decision making. So I found some really cool tricks or tips, tricks, whichever way you want to look at it or call them, that'll help you overcome this. Here is what you need to do. You need to write down on a piece of paper every time you have a winner, all right? And I'm assuming that your winners are going to be bigger than your losers, because otherwise you're not going to have a lot of positive expectancy, or your percentage of profitability will be sharply higher, so that'll help you overcome your losers. But what I want you to do is this. I want you to remind yourself every time you're faced with this thought, what happens if something goes wrong? What happens if I make another mistake? What happens if my account goes down? What I want you to do is remind yourself every morning before you look at the markets, before you do your analysis, I want you to look at your winners. Look at as many winners as possible. I want you to start getting the impact or the picture of you being a winning trader in your mind, okay? That's number one. And number two, always check for positive expectancy. Because here's what happens. A trader understands positive expectancy. Positive expectancy is having winners that are bigger than your losers, or having a really high percentage of profitability, so that even if your losers are bigger than your winners, the profitability factor will make up for it. To give you a good example, let's say you're right only 30% of the time, but let's say your winners equal $100 and your losers equal $20. Well, even if you lose 3 times and you lose $60, you'll still make $70 in profit, because if you 7 times 10 is 70. Or again, the bottom line is your winners are bigger than your losers. Or let's say your losers are bigger than your winners, but your profitability is 80% accuracy. Well, it doesn't matter, because even if you have 2 big-sized losers, your winners will compensate and overcompensate for those losers. So again, positive expectancy is simply, over time, making more money than you're losing. And there's millions of different ways to accomplish it. But the point I want you to do is, I want you to go through your winners and I want you to go through your losers, so you see that the expectancy in action. So that you see that right now, this is what your expectancy is. Whereas yesterday, this is what your expectancy was. I want you to be able to measure your expectancy and know exactly for every trade you take what your average profit factor is, okay? And in the later videos, I'm going to explain to you exactly how to calculate it. I'll even give you a math formula. But for now, you need to always, before you start the day, look at all of your trades, and you need to understand what you're responsible for. Not just the losers, but the winners too. As a matter of fact, don't look at it in isolation, because what happens is a lot of traders will look at the losers in isolation and it'll completely bum them out. Don't do that. Look at the losers, but also look at the winners, and make yourself understand that without the losers, you'll never reach the winners, and have that in mind before you start the day. Because what happens is it's very easy to forget your winners and remember just your losers. And that can really distort your idea of how you trade and really change your fingerprint around. I call it a fingerprint. Every trader has a fingerprint. So you need to make sure that your fingerprint is always giving you a positive vibe, all right? I know it sounds really simple, and I know this is not a technical video, but I'm gonna tell you something. Your perception of your trading could be your biggest enemy, or it could be your best friend. And I really mean that. I know some traders who have a sign in front of their monitors that says, you know, simple phrases like, be a winner, you're always a winner, don't focus on your losers, or losers average losers. Paul Tudor Jones has that, losers average losers. So it's very important to remind yourself of what you've been able to achieve in the past so that you could do it in the future. And again, if you guys like this video, please like this channel and subscribe to this channel. And in the next video, I'll show you the formula for expectancy so you can calculate it yourself. And I'll also show you a real simple volatility trick you can use to equalize your positions so that your losers equal the same value and your winners equal the same value, so you have some predictability in your trading. Hope it helps. Talk to you guys soon.